to a Fintech Australia in partnership with Spark Festival panel known as Neobanking, a new perspective on the future of banking. My name is Rebecca Shotguppy and I'm the CEO of Fintech Australia and the moderator for this session. Before we begin, I would like to get our panellists each to introduce themselves and then we'll kick off with some questions. If I could hand over to Dom first, please.
Hi everybody, I'm Dom, co-founder of Up. Up is an Australian neobank based in Melbourne, and we launched a couple of years ago. We just had our second birthday, so really grateful to be on the panel today, and hopefully we can answer some questions and provide some insights.
Thanks, Dom. And if I can hand over to Belinda.
Hi everybody, I'm Belinda. I'm the Chief Financial Officer at 86400, which is also a neobank, or as we like to call it, a smart bank. We've just passed our first birthday here in Australia, and like Dom said, excited to have a chat about the sector and hopefully answer some exciting questions today.
Awesome. And last but not least, Samira.
Hi, so I'm Samira. I'm the Director of Product and Payments at Zinja, which is an independent neobank as well. Got our license about over a year ago now. Got a bank account in Stash in Market. And yeah, likewise, excited to be here and looking forward to sharing some stories and providing some insight.
Great. Well, let's get started. How has the traditional bank, challenger bank and neobank evolved in the past year, particularly in the face of the pandemic?
Everyone jump in, or you go first.
Yeah, look, I think, traditional banks obviously have had to worry about different things like how customers are going to go to a branch and how you're going to complete a KYC process because you've got to do some paperwork, etc. For us, in the face of the pandemic, going from an office to a virtual home environment is kind of trivial, right? People just decided one day to go home and we went home, and that part was straightforward. The impact for us really has been more around capital. And so the old model kind of progressively iterating on a bank account and, gathering customers, generating more capital, that kind of thing really doesn't work anymore because capital's just dried up. And so the kind of runway to revenue is much shorter than it used to be. And so, thankfully being kind of high tech, low legacy, no legacy, we're able to pivot to, what we're thinking about as a sort of neobank 2.0 model now, which is more than just iterations on a bank account, but more of a financial ecosystem that can, both benefit customers but generate some revenue. So that's been a bit of a big change for us.
Thank you. And I might go to Dom next.
Yeah, I think we've been very fortunate because we were in market and we were growing and we had, we had sufficient capital to get through. I would start by saying that our customers have been severely affected. Our family, our friends, our colleagues. We know people that have died. We know people that are sick. It's a horrible situation to find yourself in. But, it's not just us, right? So Melbourne's had this big lockdown and everyone's been sad. But actually, it's a global pandemic. The whole world is suffering from it at the moment. And we've been exceptionally fortunate and privileged to be able to continue growing, continue launching new product, continue hiring people. We've hired 12 people in the last 6 months. We've been one of those fortunate companies that is a digital business. We're technology-led business. Everybody's a software engineer. Everybody works remote anyway. So I think that, we are fortunate, but we do look down from where we are now and say, well, okay, what does it look like over there or over there? And what we see around us is a lot of people suffering. Retail, a lot of our customers are very young. They're skewed young, but sort of customers are between 16 and 25. All of them are employed in either retail or hospitality. And so when we look at those young aspiring individuals that have lost their job or no longer have the earning capacity or might not have the same needs of a bank as what they had before COVID, it does make you stop and think about ways that you can help them and ways that you can do things differently that sort of benefits the community and not just builds a new business, if you know what I mean.
completely know what you mean. I can tell I've missed seeing the Up logo all around my neighbourhood. Used to see people in Up shirts every day, so it's a very distinct change having you all work from home. Have you done anything, Dom, just expanding on that, to really dive deeper into that customer experience and knowledge, given that you've said to build the community? Have you done anything along those lines yet?
We have. I think a lot of the things that we do are fairly small and subtle. Like we try to be very responsive. So customers were talking about getting cash out, for example, has been a problem for people. And so, of course, we integrated the FPOS capability into Apple Pay. It's a small thing. But, probably the deliberate, the bigger things that we've done have been like, we launched a program we call Upskill. And Upskill was a phenomenal success. We expected that we'd have a few hundred people turning up and, we'd run an online webinar, and everyone's so zoomed out at the moment that we thought no one could be bothered. But actually, while people are stuck at home, they came along and had, we had one session was on mental health, another session was, on financial literacy. We're doing another session with a futurist about, being the best that you can be, helping people, be focused and motivated while they're just getting through this 6 months, and it's going to be 9 months. And, so I think that was an extraordinary thing. We've had over 1,000 people participate in the live event. We had 5,000 people either download or view it online. And so for us, that's a small thing that we could do that would make a difference. Sending out welcome packs to people became really difficult. It would take, instead of 3 days, it would sometimes take up to a month, especially if they're in a regional location. And there's nothing we can do about that. So we would look at ways to help people digitally so they don't need to have their welcome pack. We'd send them extra goodies in their welcome pack, so that they get a little surprise and delight moment while they're stuck at home. So lots of little things like that. I think the other big one for us was the perk up, right? In Melbourne, at least, when we're in complete lockdown, you couldn't go out to your favourite cafe and get a coffee. And so we stopped our perk up program, which, basically shouts you a coffee. And we stopped it during COVID. We actually reintroduced it about a month ago, and it's gone gangbusters. We've given away over 5,000 coffees in the last month or so. And it's just amazing because people are starting to either get takeaway or they are starting to go back out and buy coffees. And I think that's a small thing. You don't think that a bank could make your day, but people send us heartfelt messages about how that literally made their day. It might be $5, but it's a small token gesture in these hard times that really turn people around and make them, inspire them to just be awesome. So, yeah, that's been really, really great. There's some of the things that off the top of my head.
They're awesome. Belinda, turning to that initial question, and how have you seen the neobanking market evolve over the pandemic?
I think for 86400, it's been a blend of the experiences from Up and Zinger. Obviously, we'd been in market a little bit longer. We actually launched home loans in 2019 as well, so we weren't pre-revenue. So we did have some revenue products in market already, which obviously is very helpful. And we closed our Series A capital round during March and April as well. So obviously in the early days of COVID, so we were really pleased with that result as well, and recently opened and actually started welcoming new shareholders under our Series B capital round as well. So we took the view that our purpose to help Australians take control of their money was already relevant before the pandemic, but became even more relevant, obviously, in a COVID world. So we really made sure that we did everything we could so we could maintain that momentum. We thought it was really important to keep delivering new features and keep delivering on our promises to be Australia's smart bank and make sure that we are really helping our customers out. I think today, with the low interest rate environment, things and banking features that help you save or help you change your spending habits are just as important, if not more important, than a great interest rate as well, because unfortunately, it looks like low interest rates are here to stay. So we really doubled down on those, spending and saving features. An example we run as well during the pandemic was a campaign called Pay It Forward, where we looked at, obviously, because one of our features with our upcoming bills, our customers love it. We predict the bills that are coming up into the future for you. So it might be a Netflix subscription. It might be, we saw a lot of gym memberships pause and drop off during COVID, but subscriptions like your gym membership, it might be your energy bill. What we do is we actually select at random bills each week and pay them on behalf of our customers, which obviously during COVID was extremely helpful for all those customers lucky enough to be selected. I think our favourite experience with that, though, was we actually had one very generous customer reach out and say, actually, I'm doing okay. I've kept my job. I'd really love you to put this entry back in the pool for someone who's maybe not been as fortunate as I have. So some pretty extreme generosity, which we were very, very touched by to see, 86,400 customers looking after each other. So, look, COVID's definitely changed every sector. Banking hasn't been an exception. But I think a lot of what the neobanking sector is delivering to customers is even more important today than it was a year ago.
Thanks, Belinda. And there is more and more neobanks in the market at the moment, and I know that there's a few licenses also underway. How has the current uptake been from Australian consumers, and how have neobanks progressed beyond the margins and take overall customers banking?
Maybe if I jump in there, I mean, I'm happy for other guys to jump in too, but I actually think that just between the people on this call, like our businesses have already had an impact on the Australian banking market, and there are others, right? As you mentioned, but like when I know our numbers, I don't know everybody else's, but we've had billions and billions of dollars flowing in from the big four banks, so it's no longer just a neobank that's sort of tickling at their heels. Our number one source of funding into the Up account comes from Commonwealth Bank. We would have received more than $500 million from Commonwealth Bank customers just over the last year. So I think that when I look at the amount of money that's flowing in, and then I look at our transaction volumes have been around about, at the moment, 12.5 billion. And so again, when you're talking billions and not millions, it does start to have a material impact on the competitiveness of the industry. And so if you added together the stuff from Zinger and 86,400 and other neobanks, I think that the big banks might, potentially have rested on their laurels when the regulatory change happened and the neobanking movement sort of started. But what we've seen is CBA launch a product called Neo. We've seen NAB launch a product called Straight Up that looks exactly like an Up card. We've seen Westpac offering ludicrous rates and charging fees and making it a bit difficult for customers to understand the actual final outcome is no better than what they're already getting. But that's three of the four majors that have literally responded to the Neos just in the last few months. So I think we're going to see an increased competition, and we're going to see all of the majors making plays in this space. And we're just going to keep being awesome and keep surprising and delighting customers and providing a banking experience that is fun and interesting, helping people spend and save, reconnect with their money, and they just move away from the majors in droves. So I think it's actually awesome and it's working.
I think one of the predictions there is correct, and it's been one that I've been spruiking post-COVID, that more people are going to want to manage their money and have an understanding on what's coming in and what's going out. And I do think that Neos have a better ability to provide that insight to consumers, and I do think it will be a massive positive for you all. But Belinda, what is your take on that question?
Yeah, thanks, Rebecca. I think I might tackle a different part of the question to Dom. So when we look at, will neobanks take over all of a customer's banking? It's a pretty common question. I'm sure we all get asked as well. And there's interesting research that talks about over 60% of Australians today, and this was pre-COVID, so it could be even more today, have at least two banks, if not more. So the idea of having one main financial institution, I think, is very much an outdated view of looking at banking today. Many customers have multiple banks. We ran some sort of cheeky ads when we first started, predicated on the idea that it's okay to keep seeing other banks, because we don't expect customers to wake up and go, oh, I know what I might do today. I'm going to change my bank account. It's just not really something that the customers will do. But what we are seeing is, obviously, because neobanking, they're easy to join, it's frictionless, there's no fees, more and more customers are trying us out. And we're seeing more and more engagement amongst those customers then. So lots of use of, all of not only the physical card, but all the digital pays as well. Obviously, we see a huge amount of transactional activity in real-time payments. And we're really seeing that depth of engagement and week-on-week increases in log-on activity and that sort of thing amongst our customer base, which is fantastic. So I think really from our point of view, what I would expect is that it might be the same customer that's sitting amongst 3 or 4 banks in Australia, and I think some of the more traditional banks will think of them as their customer, without necessarily having the view that they obviously do have relationships with lots of different banks as well. I think one of the pieces then is, how do we, given banking is complex and becoming really anxiety-inducing, how do banks bring back that simplicity? So that's one of the things we really worked really hard on. We allow you to connect your other bank accounts into the 86400 app, so you can get an entire view of your financial world in the one place. It allows us to do simple things like show your total cash position that actually most customers don't know day to day, because they would have to add it up amongst 3 or 4 different places. So it's really the fragmentation of banking has really driven a different type of experience, I think, amongst the newer banks, and how do we look at doing things quite differently to the incumbents as well.
I know I can certainly relate to that. I think I have each one of your banks open on my app, and then about 4 other Neos on my banking app. So I think I've got like 10 accounts, but don't hold that again. Samira, do you have anything to add to that question?
Yeah, so I think, to pick up on this point again of sort of being the main bank, our purpose is to help customers make more out of their money and remove the angst. And we have this belief that, if you can make managing your money engaging and fun, people will just naturally get better at it. And it speaks to the point about engagement as well. So, for us, it's more about creating a financial ecosystem, services that actually add value, that are simple to understand, that leave a customer better off, and having the bank account be the kind of gateway to that set of services. We don't really think of neobanking as just limited to traditional banking products, bank accounts and loans. We've created something called Dabble, which is sort of subject to regulatory approval, will launch soon, and it's a fractionalized US share trading platform, and it's integrated beautifully into the Zinja app. So it's about creating access to something that otherwise had huge barriers, but now you can invest $10 a week if what you can afford is $10 a week, and in such a low interest rate environment, making more out of your money is going to mean more than a savings account. So, we're kind of looking at, if our purpose is to have customers make more out of their money, reduce the angst, then what are the kind of experiences that we can create, rather than worrying about, sort of competition and whether we're the main bank or not. It's more just about creating value for people so that they can be better off. And if that gives them, better choices than they previously had, then that's a good outcome.
Definitely is. You've touched on something there. How difficult is it to sustain engagement, retention and repeat usage with your customers? I might go straight to Sonia, given that you already touched on it a little bit. Yeah.
To the previous point, as long as we're creating genuine value and there's a purpose for customers to use the app, to use the products, and we're able to create a beautiful experience where this is easy to do, we think that engagement will come naturally. So, and that's what we've seen, right? I mean, you don't think about a bank app like winking at you with these are just small things, but it creates these little moments that makes you want to go back to the app, makes you want to increase usage. We did a partnership with Uber through the peak of the lockdown in Sydney for healthcare workers. So we gave them kind of free Uber Eats for a month. There's all of these little things that in a neo world are easy for us to do, that create the engagement. And what we've seen is a real appetite for something more, something different than a traditional bank. And we've seen people actually want to go to the app, look for new things, give us recommendations on what they'd like to see next. And there's a real sort of community connection, which sort of says there's a real appetite to see more than just a digital bank account, but actually something, beyond that as well.
Belinda, do you have any thoughts on retention and?
Yeah, for us, it hasn't been difficult in terms of engagement, retention, usage. We've found that it's really quite an organic experience there, that as customers join, they try us, they maybe use some of the features at first, and then the depth only increases over time as well. So it's been quite a sort of delight to see customers actually using the app and then using it more and more. And we've introduced new features over the past 6 months as well, including things like push notifications. And again, similar to Samira, it's very much about, if you design your products well and design your experiences well, so it reduces that anxiety, helps you take control, customers don't feel sort of stressed about logging into their banking app. They actually look forward to it. Little things like we let you put as many emojis as you want in your account names and nicknames and all of that sort of thing. And it seems fun on the surface of it, but it actually serves a much deeper purpose in that it's changing the way people feel about their money, which I think is just as important about changing the way people think about their money. So from that perspective, in terms of, it certainly isn't difficult to drive engagement, retention, usage. It's obviously something we work very hard on, but it evolved quite organically for 86400.
Thanks, Belinda. And Dom, I know you'll have a few things to say on this one.
Yes, I was holding my tongue. Like we're very passionate, like the others, about engagement. I think it's fair to say that it's come easy to us as well, in the sense that our customers have loved Up, and so they've become more passionate, more engaged over time. And as we launch new features, they get more engaged. But I just wanted to touch on maybe a different perspective, which is you can't run a business unless you have that engaged customer. You need the customer to consume your services, to pay you fees, or to generate a margin, or you need to do something with them. And so what we've been doing, sort of is launching cool things and interesting things, but more importantly, adding utility to their life. And so like our launch of our API was a good example where none of the big banks have an API other than NAB, but try and sign up for it and try and do something useful with it. It's really difficult. And so when we launched ours and made it really simple, and you can sign up in 10 seconds and you just scan a QR code, and then you can start actually accessing your own data and doing all these cool things. It's really that accessibility. And I think that in order to run a successful business, you don't just have to have the engagement, you've got to convert it into revenue. Otherwise you can't, none of us could survive. And so one of the things that's been fascinating, similar to what we heard from the others, is that we never went out saying that you should switch. We always just, encourage people to try it out and just see what it was like. And then when they experience how much better it is than anything else in the market, then they just become sort of hooked and they want to keep going. But for us, what we've been monitoring is how many people have transferred money over from a major. And we look at the majors and ING and Macquarie and some of the big players, and then how many of them have done that consecutively, and then how many of them have put their salary into their Up account. And most neobanks around the world, I think we have a unique market in Australia. Like most neobanks around the world would look at things like a 10 or a 20% sort of engagement, so that they can get what they call the primary financial institution. That's never been something interesting for us. But what has been interesting is, by not focusing on that and just focusing on excellence and focusing on fun, we have over 50% of our active customers depositing their salary, or more than $1,000 a month every month, into Up. And so that's sort of like the international metric is £1,000, $1,000, $1,000 US, €1,000. And so for us, that's a sort of an indication that what we're doing is working and what we're doing is right. And it is actually adding value to our customers' lives, because there's no reason for a customer to move, as we heard before, from a major bank to a neobank unless they're going to get some benefit. And so I think that rather than try and sell the benefits, we've actually just kept delivering the awesomeness. And then that has actually helped those customers to have the confidence to be able to slowly move their funding over and eventually their salary. And then they essentially become customers for life. And I think it's right to say that the average Australian has 3 bank accounts, right? So we're not anticipating that people will only use Up. I think people will use 86400, Zinja, Up. They'll use Volt, they'll use Pelican, they'll use CommBank, NAB and Macquarie all at the same time. And I think that's the ecosystem that we're in. And so we shouldn't be sort of possessive about whose customer it is. It's actually the customer is themselves. And if we can offer a service that they value, then we'll have a relationship. And I think that's really important.
That's a very good point, Dom. Touching on another major subject that happened this year, open banking officially launched and is still being constantly shaped by industry feedback and consultation. What are your thoughts about the progress on open banking in Australia, and where do you see the biggest benefits for neobanking in the sector?
I know Belinda has a view on this.
Go, Belinda.
We'll let you go first, Belinda.
Yeah, I can kick off. So we're huge fans of open banking. We actually participated as one of 10 in the trial, as well as a data recipient. And obviously all neobanks have a role to play as data holders as well. So we'll all be participants in some way or another. So whilst we're huge fans, when we've really welcomed the start of open banking, there's really a lot of work left to do to really drive open banking, I think, to where it needs to be actually useful for consumers. So we think that it's probably 2 or 3 years away before it gets to the point that it's as useful as we would like. And obviously open banking is a very complex regime. It involves lots of moving parts, and the fact that the rules are still being shaped as it's evolving in different phases of going live, I think speaks to that complexity as well. So we're really looking forward to it at the time that it's usable. We've done a little trial at the moment where we're actually using open banking data on 86400's website to show interest rates of the major banks. So if anyone's keen to check that out, by all means, go and have a look. But it's really about progressing the data to the data that's available to the place that it actually can provide more substantive value to consumers is what we're looking forward to in open banking.
Great. And Dom, I know this is something you're also a huge advocate for, the transition.
Yeah, absolutely. Like we're massive fans, and we've been helping, whether it's through Fintech Australia or whether it's, through conferences or advocacy. For us, open banking, it's clearly the future and it's amazing. But it is a slow road, and it requires adoption of all of the major banks. So the major banks representing 85% of the market, just the top 4. So we need those guys to obviously be on board. And so they've set up the regime so that it does allow those major banks to be first movers in the space. But they're still very slow moving. So just to back up what Belinda was saying is that it's going to be many, many years before open banking really comes into its own and is able to do the things that we've seen happen overseas. So for example, one of my pet peeves is that in the UK, one of the really great things is the switch guarantee. If people want to switch a bank, it's not that they want to necessarily use one bank only. It's that they want to move their direct debits, they want to move their utility bills, they want to move their sort of day-to-day life. And when open banking offers that service, and it's universal across the industry, that'd be awesome. But that's a long way away. What we have to rely on at the moment is individual neobanks and individual fintechs to actually build that capability and hook into the open banking capability. So for us, we looked at that and we said, well, that's fine, it's coming, and we will support it, and we'll be massive advocates. But what are the key elements? What is it, if we boiled it down to its essence? What is it? It's obviously in the name, consumer data rights. Like, it's your right to your own data. It's being able to share that data with a third party, and it's being able to do that in a consent-based model. So providing authorization and being able to, rescind or give out that consent very easily. And so the mechanisms that are used to do that are the same mechanisms that we thought, well, why don't we implement that into our own API so that you can have an OAuth token, you can have, a third party accessing data and all that sort of stuff. But why not start with you as the ultimate third party? As at the moment, it's very difficult for customers to get access to their own data, let alone giving that access to third parties. So for us, it was about how do we go for the journey and support the open banking movement, and at the same time provide other tools for our customers. And the first one that we launched was this API, which in the first week, we had over 1,000 signups. I think we're over 2,000 signups now. But that's a lot more than the couple of data recipients that we have in open banking. And it's not because open banking is not awesome. It's just because it'll be slow moving. And so I think over time, if customers can access their own data, and then they can build their own integrations and apps and automate their life and implement the Barefoot Investor or implement She's on the Money or implement My Money Madams or Millennial Money or whatever it is that that they're passionate about, and implement that into their life through their bank, I think that would be just gold, and that'd be awesome. And in some ways, it's kind of the first baby steps towards this open banking industry-wide. And we've seen not only good adoption early days, but we've seen practical things being built and shared. So some customers will build stuff on GitHub and share it with all the other upsiders, which is pretty crazy. So I think that's sort of just, it's in its infancy, but you know, it's been really, really great to see that. And yeah, we'll keep working with these guys and others to support it as it rolls out.
Great, Dom. And Samira?
Yeah, I mean, to the earlier point, neobanks are in a really interesting spot, right? Because if you look at it as black and white, you've got the banks that are the data holders, and then you've got all of these fintechs and other third-party participants that can certify as data recipients, and that's kind of where all the innovation potential and the real kind of, you know, beautiful experiences that you can create for customers, for them to actually get control in a, in an experience that actually gives them that control. As neos, we play really nicely in both spaces, right? So the compliance components on, you know, what it takes to get compliant from a data holder perspective for us is kind of no big deal. In a sort of no legacy environment, the technical components of being a data holder are, you know, reasonably easy, and we're kind of fine with those. But the real opportunity is on the data recipient side, and you know, whether it's partnerships, whether it's build. You know, what would be great to see, as Dom touched on, is you know, a really neat switching service, which is, you know, truly like switching all of your direct debits, your bills, etc., along with obviously, you know, KYC, the whole thing, would be a really great service. And I think if we really put a customer at the center of what all those implementations are, really add value and give them control, there's a ton of potential there. But to Dom's point, it's going to be like a slow, long road, because really you're relying on sort of, you know, the big banks coming to the party, and you need the masses on the data holder side before you can really start to create value on the recipient side.
Thank you for that. And you've already touched a little bit on the next question. Where do you see the future for open banking for neobanks? And are there any features or implementations that you would like to see that have not been considered?
Yeah, we sort of covered it a little bit, didn't we? But
yeah, I mean, clearly as neos, the big advantage for customers would be, you know, a really simple switching service. And I think the complexity, and I think what will need to be cracked is a beautiful UX to go with CDR, because consumer data, right, one of the complications with it, obviously, consent-based model in principle, of course, it's a terrific idea. Making sure that your data is used for a given purpose, destroyed at the end of that purpose. The experience that goes with all of that really needs to be thought through, and what does it mean for, you know, a regular person who isn't a neobanking nerd to think about, you know, what does CDR mean to me? What control does it give me in a way that I understand at the time that I need it? I think there's a ton of potential there. I'm not sure it's been fully thought through with that lens yet. Mostly it's been about compliance and deadlines at the moment.
And that's something that I know Fintech Australia has been working on quite closely with members in relation to that user experience, because the proposed 12 slides that people would need to go through to get to the yes, realistically, we know most people, when they get to the 5th slide, probably won't continue. So we need to learn from the
now
UK.
They're just swiping, right?
Yeah. So we really need to look at that user experience. So I would agree with you in that one as well. Belinda and Dom, do you have anything to add? I know you kind of answered that in your original answers, but I thought I just might come back and check.
Yeah, just really briefly, it would be the depth of the data, I think, is the piece that we're looking forward to the most. And it's things like, you know, direct debits, as Dom mentioned earlier, but things like joint accounts and that really next level down. I think at the moment it's been very focused on balance, interest rate, which is obviously great and very useful, but there are solutions out there for that sort of information already. So it's how do we bring that depth of data through and to actually make it truly valuable for consumers as well.
Yeah, I think I agree, and I think if we really want it to be successful, we have to take the principles of open banking and implement them. So I'll give you some examples like what we've done now and what we're thinking about for the future is that, 2 years ago when we first launched, we did a partnership with Afterpay, and we share data, and we share data in the same way that the data is shared through the open banking, the CDR regime. We use a consent-based model. We have an OAuth-based authentication. We let the customer drive how that data is shared between the different parties and everything. And we built it with the same principles, not with the same framework, if that makes sense. And I think that if those principles can be applied to innovation, then that's the future of it. The future of open banking is not the technical compliance, regulatory stuff. We did an integration recently with TransferWise, so we're first bank in Asia to announce that integration and first in Australia to go live. It's great and it's awesome, and it saves customers money, and they can transfer money instantly. I think that the transfers now take a matter of seconds or minutes rather than days. To do an international transfer, it's awesome. But, the price comparison component that, Belinda talked about that in regards to rates, but in regards to interest rates, but, we do that for foreign exchange prices for TransferWise. The ability to share data and to share data with consent from the customer, the ability to, build those type of partnerships using CDR rather than screen scraping. I think that's the future. Like, the future is taking those principles and then innovating them into products and bringing those products to market and leveraging this deep data set and leveraging this consent model right across the industry. Joint accounts is another one I would have mentioned, which is a great one. Shared accounts, joint accounts, foreign exchange, things like that. Like, we had to do a shared KYC model with TransferWise that isn't supported by regulation in Australia today. And so it took us more than a year to actually get stuff changed so that we could share KYC data between the organisations and not have to double KYC people. It's a very strange situation. So I think as the KYC matures and evolves, and I think as open banking matures and evolves, alongside the neobanks and the fintechs and the innovation with advocacy from Fintech Australia, put all those things together, you have the perfect storm. And we can eventually replace screen scraping, we can eventually innovate on using those principles, and we can see awesome new products coming to market that add value to consumers. But I think it's a long journey, but we're very excited, obviously, about it.
I can only imagine what realms of products you create then when you add telecommunications data and energy data to the work that you're doing. Like, that surely will also open up a whole new suite of products that you can build and innovate on. Maybe I'm getting ahead of myself, but I suspect there's some future there as well.
I don't think you're ahead of yourself. I was just going to say, I don't think that's getting too far ahead. Like, we've started already with our Energy Switch product, where we let people email through their energy bill. We work with our partners to analyse something like 200 different data points, and then provide all the way through to the actual switch experience. And again, it's through that consent-based model and sharing of information that we're able to do that. But it leads to a really frictionless experience for customers. So it's one thing to be told, oh, we can save you money on your energy bill, but then to actually help you facilitate changing providers is the next step that no bank has done before. And customers love it because it's easy and that's simple and it takes time out of the process. And that's really what open banking is about, is about giving people access to their data to make their lives easier and simpler.
Yeah, and can you only imagine when you don't even need to get a bill, you'll be able to draw that data out direction by the probably our last question, and you guys have already touched on a few aspects of it, so we'll probably tie it all together. The neobanking sector has grown considerably over the last 12 months, with new Australian and international participants entering the market. How do you stay ahead of the competition and maintain a competitive advantage? We've all kind of touched on it, but it'd be nice to kind of round the session out with your new answer to this. I might start with you, Belinda.
Sure. So for us, it's I'm sure everyone's going to have a similar answer. It's obviously listening to your customers is the number one piece here. So far in our first year, we've received over 10,000 pieces of unique feedback from our customers, which is extremely valuable and useful. And really for us, it's about balancing between delivering what you would expect from a bank, but doing it better. And that's all those everyday banking features, but doing them in a really simple and easy to use way. And as well as that, delivering more than you would expect from a bank. And that's where we've brought in features like, connected accounts, your upcoming bills, have really been those most loved features because they drive delight. But really through listening to our customers, it was that we needed to deliver the everyday banking as well. And that's where you really drive that usage and engagement. I think for us, an example this year that we've been doing is our shared account pilot. So we've been in pilot for our shared account for a little while now. And really we've brought a cohort of customers through. They've got the accounts live. They get to test them. They fill in surveys. They do workshops with us about what they do and don't like about the experience, which has been a phenomenal learning for us, but really lets us co-design with our customers as well. And we're looking forward to getting that live soon as well. So it's I'm sure everyone's going to say something simple like this, but it's really just listening to your customers is the number one way that you're going to maintain your competitive advantage, I think.
Thanks, Belinda. Dom?
Yeah, I might just answer in two parts. The first part about the observation the neo market has been growing. Just to put some flavour around that, like we've doubled our customers in the last 12 months. We've had 10 times our deposits. Instead of having hundreds of millions, we've had billions. We've seen about 7 or 8 times our transaction volume. So instead of being single-digit million transaction volumes, we're now in the hundreds of millions. So just to be absolutely right, in the last couple of years, the neobanking sector has really taken off, and we've seen an enormous amount of scale. I would call that launch, not scale. None of us have hit the hockey stick yet. None of us have really had, a percentage impact on the market. And I think that that's the next stage. So in terms of, what's next for us or what does the future hold and how do we differentiate? It really comes down to who we are. A lot of the essence of Up comes out through our upsiders, our customers, and it's coming from the heart. It's because we are passionate about helping them live their lives better. We're passionate about, integrating sort of financial services in an invisible way into their lives. We're passionate about sort of de-stressing and reconnecting with your money. Over the last decade, we've seen people moving away from understanding their money. And you said earlier, Rebecca, that, we're in a fairly unique position to be able to provide all of your spending analysis, to be able to help people save money. So I think for us, it's not just focusing on, like we heard before, it's not just focusing on the features, it's focusing on the emotional intent, the psychological outcome, the way you feel about it. All of those emotional things go into it. And I think that our heart and our care and our passion as a team comes out through our product, our brand and our features. And if we just keep doing that and customers keep loving us, then I think that you end up with that feedback loop where you can just continue to innovate and you can continue to deliver things that help us maintain first mover and competitive advantage. And that's what we want to double down on.
Thanks, Dom. And Samira?
So I think, to the part about your question on is there still room for growth by disruption, I think what we've seen a clear and huge appetite for is room for purpose-driven banking, right? So for us, we've always called ourselves for profit, for purpose. And what we've seen is a huge appetite for a bank that is truly interested in the customer's best interest. And that's what our entire roadmap is built around and will be built around. What it means, though, in the environment we find ourselves in, is that we don't need to be limited by, digital versions of a bank account and kind of digital versions of a loan and kind of classic banky things. We have the opportunity to do some banky things and some really not so banky things, all in the interests of truly making sure that our customers are better off. And so what we've seen, obviously, is a huge appetite for that. And Dabble's a great example of that. Other things in the roadmap are really focused around making sure that customers really do end up better off with their money because of us, not necessarily exclusively to the earlier points. But the beauty of the environment we find ourselves in is indeed that there is so much room for creative business models and kind of different partnerships than you would expect from a bank, all in the interests of making sure that our customers are coming out on top.
Thank you. You kind of stole my last question. In 20 words or less, Dom, is there still room for growth by disruption and partnerships in the market?
Yes.
Belinda, you might have
I'll maybe use some of Dom's 20 words then. For us, it means, maintaining momentum. Means sometimes you build it yourself, and sometimes you partner with another very innovative fintech to bring a product to market that consumers are going to enjoy. I think there's very much room for both models in the ecosystem.
And I would like to congratulate all of you on the excellent partnerships that you guys have done, not only with smaller fintechs in the market, but some of the largest players, whether that's Zip, Afterpay, TransferWise. I think that you guys are leading the way in the partnership model. With 20 seconds to go, I'd like to thank you all for your time today, and thank our audience. Fintech Australia really appreciates the engagement we've got through Spark Festival, and I hope that you enjoy the rest of Spark. And thank you all to our panellists.
Thanks very much for having us. It was great to be here.